We're going to base this on the current Forex platform that you have, so 100,000 capital and 100 to 1 leverage. But before we get into that, in the previous, in the city trading game, yeah, someone left their calculator, so it's just lost and found issues. Was it you? Okay, I'll get it to you next week. Okay, the other thing is, someone also left a stash of $20 notes that week. Did anyone do that?
Yeah.
Not me.
I found the rubber band. Sorry. Sorry, I'm fiddling. Okay, so basically, if you're looking at a capital of 1,000 in this case, I cut it down so we don't have big figures and it's not 100,000. And you're looking to have a 5% risk per trade, yeah? So that you don't lose massive amounts of capital when you make a single trade. You don't want to do that because on the chances are, even though if you're a brilliant trader, you're going to make at least 6 trades correct and 4 trades wrong. If you're even better 7, but even the best don't go beyond the 7.3 average. So your stop losses and your risk management is very, very important. So in that case, if you want to have a 5% risk per trade, and that would mean your maximum loss can only be $50 on $1,000, yeah, on $1,000 capital, yeah. So if you invest 10% on one single trade idea, that would mean you can take a price movement of 50%. Yeah, but wait, hang on. No price movement of 50%, but on your trade, your risk appetite can be 50% of loss on that. But that would mean that would translate, because of the 100 to 1 leverage, that would translate to only a 0.5% movement on your price. Now, foreign exchange currency can move 1%, 2%, up to, yeah, for many reasons, even sometimes up to 3% in a single day. So if you're looking to have only a 0.5% risk on price movement, then you must pick your trades and pick your stop loss very, very carefully. Where Sweatin's already told you on why having stop loss is important. You don't want to get caught out, and if you, in the same case, if you pick your stop losses in the wrong position and you try and achieve only a 0.5% price movement, that would mean you're going to get caught out just because you have a stop loss. So in this,
just to jump in, that was also a thing I noticed when I was going through the trades. A lot of people who decide to use stop losses put really, really tight stop losses, and you don't give yourself a chance to run with the trend, because you can have a minor fluctuation in prices and you got screwed just because your stop was like 4 bips or whatever.
Yeah.
So more generous with it.
In that case, if you are having one of the important things to know that is when you're having a trading session where the price moves like that, to put a stop loss any position around here would mean that you're going to get caught out. Yeah. Some of the better places to do is to put your, if the price breaks out, if that's the way you trade. Thomas would disagree with me and trade in a different way. But if you're trading in such a way and you wait for the price to break out either below or above, you want to have your stop losses just below your supports or just above your resistance, yeah? And I'll show that to you in the graphs.
If it's there.
You need to put it to it. I put it just there. Or just change it.
I'm not sure if it's
80. Yeah. Okay, this is a trade that I put in yesterday. By the way, I got 16% on capital in one trade. Okay, but anyway, basically, so if you look at the charts, you see that you have a resistance on this line. Anyone see 120? Yeah. So one of the main things why I took the trade is when I looked at the daily, you're going to see a double top formation here. This is where the pattern was. Well, you could say the pattern's confirmed around this area, but this is where the previous bottom was, and when it breaches this, it's a proper confirmation. And in such a case, the price normally moves 2 times the tail length. So it would be from here to here, right down here, times 2. that would give a price movement to about 83 US dollars to 1 Aussie. So that means there's a lot of price movement, and with this pattern, I figured I'd go short. And then we looked at the hourly, and this is where I put my stop loss, just above the 98 level. I'll put it at 98. Well, if you notice, the actual price, yeah, is at 98.1. I put my stop loss at 98.30. That meant when the price entered, when the trade enters over here at $98, which was my limit order, I can take a nice trade down. The reason why I say you have to put it somewhere above the resistance is because there are fail breakouts, and perhaps you could see it somewhere here. Yeah, in this case over here, if I can highlight this, you see a failed breakout. So if you actually did put a trade in somewhere here, and you didn't have a stop loss just about here, you'd get caught out massively. And why must it be just above the resistance? Is because even when it trends up, okay, I've not spotted this yet, but sorry, but when it trends up, and I'll draw this so you can see it. When it breaks down in this area, there's a tendency for it to try and test the levels, so it can go down before it does this. So if price movements have a tendency to do this, this is your safe area. So if your stop loss is somewhere here, you won't get caught out, as we pointed out earlier, where if you put your stop losses in a position which the prices have a tendency to move to, you're going to get caught out and you're going to lose just because you had a stop loss. Yeah? So basically that's where some of the areas you want to put your stop losses in when you're trading with resistance and support lines.
Basically the idea is to use a previous support line or support level or resistance to place your stop order.
Yeah.
Because that way you can ensure that you will allow the trend to run its course, and if it breaks the resistance level, obviously you're cut off. So.
Yeah, exactly. And you could use many forms of resistance. One form is obviously the resistance and support lines, like these. The other ones would be your moving averages. You can see the price kind of honors the 50 moving average. So you can put your stop losses just above that and give you a nice, what's the right word? A stop loss that's moving with your trade. Sorry? Yeah, tracking stop loss. I think that's what you call it. So Thomas, do you have anything to add to that?
Yeah, actually that's just a good point there. You can see this is actually a trade item here. You see I carried the trade all the way down using the 50 moving average as my level resistance. That's how I do my trading. I'm just going to hammer on a bit about the actual stop loss sizes, because what I do is I like to have a stop loss size dependent on how probable the price is not going to move against me. So the more probable the price is going to move against me, I'll have a larger stop loss to accommodate for that. If there's a smaller chance that's going to happen, say if there's like 2 levels of resistance confirming price will not move down that level, I will then have a tighter stop. So to give you an example of this, I'm just going to stick on a trend line with this.
Yeah, that's actually a good point. You can vary your stop loss. You don't have to take a 5%. Generally, I normally take about 2%, 2 to 3%.
That's right, yeah. So you can see here, there's a trend line, but you've also got confirmation of 50 EMA all along here. So 50 moving average. So you've got basically this point here, which is a trade item, or here. But here you can see there's 2 levels of resistance, right? So you've got your 50 EMA and you've got your trend line. So you've got 2. So you can have a tighter stop on that one. Whereas if you have, say, this one, you may want to have a wider stop because price may fluctuate and move up because there's less strength in that resistance.
And just one more point, I haven't mentioned it. Also, it is also very important to change your stop orders as the trend develops. So if the trend is going with you and you're making money and so on, you just pick another level where you can identify a suitable position for a stop loss and place it there, and this way you lock in your profits. So once you break even, you can place a stop loss. Then when you identify another resistance and you go all along, place another stop loss, and this way you're locking your profits, and you're not allowing yourself to be greedy once it turns against you and just wait for it to come back.
Yeah. So yeah, that's a very basic introduction to how you're going to pick your stop losses and to manage your risk. Yeah.
How would you guys suggest to trade economic events such as if Ben Bernanke or whoever is talking about the economy and he's publishing a new news report? How would you guys suggest to trade that? Because there's usually a lot of volatility and fluctuations in the stocks or in the currencies. How would you trade that?
If I were to pick the trade, I'll follow first I'll take the fundamental side. Obviously, if his actions means that the dollar is going to rise, I'll go long on the dollar, but I'll still make sure that I identify trending patterns where I can have my resistance and support, or even use my moving averages as my resistance and support lines, because these are normally honored even in fundamental action.
You always have to take in mind if it's expected or unexpected, because he can make a statement which is widely expected and everyone expected him to say, to introduce QE, for example, and everyone was expecting, so you probably won't have that much of a shock in the market if it's something that everyone was expecting, and on the other hand, if it's something really...
In fact, we can illustrate that, because yesterday the German bonds didn't take up, they only had 60% take up on the market, so that would affect the euro inversely. So if we go there, where was yesterday? So I was already on a downward trend, but you can see over here you still have a resistance around this point.
I think if you go to a 10-minute chart, you're probably going to see it better.
This is the hourly chart. I think that's also right. So you can still. Is this the euro? Yeah. I just drew that line on the daily, and you can. It's come up as a resistance on this point. You can see it hits along a couple of points of touch. You just need to move it down a little bit lower. So the resistance and support lines are normally honored even in fundamental movements, and you can obviously use them as your stop loss point. Even then, you could use a parabolic SAR, which is the dots over here, but these only work on trending trades. If they're trading, the parabolic SAR tends to swerve on different directions, which can hurt you. So if the trade is trending and there's a nice movement downwards, you can put your stop losses exactly where these points are. But I'd say go for the closest resistance point. Suppose you had a resistance point that's on it in this. Well, the 10 is not very on it. Well, in this case, the closest resistance would be this line over here. If this line was not there, then the closest resistance is this, because this has not been the moving average 10 has not been on it. It's just been following the trade mostly. So yeah.
I'm just going to add to that, like the fundamental side of things. Like, there's no real right way of doing things, and these are just suggestions, because I personally don't, consider that as much. If I see news going on, I will actually sort of completely avoid trading on that day. I'll just sit back and sit on my hands, because I don't want to. There's too much, unpredictability in the market to place a trade if there's news going on. So what I do is I just, sit back, let the market do its thing. Then tomorrow I may resume trading. So you can do that as well for risk management.
Yeah. Do you have any other questions? No. All right.
Okay.